Welcome back to Lem's Cryptoverse. Today we have the pleasure of speaking with Mike Fay from Blockchain Reaction, which is on the Seeking Alpha platform. And remember, we're here to entertain you. This is not financial advice. So Mike, maybe you could give us a little of your background in TradeFi, if you have any, or just your background in general. And then later, talk us through your crypto journey.
Sure. Yeah. So thanks for having me, first of all. My background is actually in media analytics. So I spent several years as a media analyst in following the consumer, and using both quantitative and qualitative data sets to try to help small businesses figure out the best place to put their advertising. Um, from that, kind of developed an aptitude for understanding business models and how do you generate a return on an expense. And at the same time, I managed my own money, so I've always been interested in finance. So that's really my background. I was never actually, I never worked for a bank or anything like that, or an investment firm. Purely just small business experience, working with small business owners, and analyzing data. So that was the professional background. And I've always been interested in finance. 2017, watched the Bitcoin run, and
Wow.
very upset about it, actually, because I learned about Bitcoin in 2012, and
Wow.
found it too difficult to get it. So I was like, if I can't figure out how to buy this, no one's going to figure out how to buy this, so I'm not going to buy it. And I didn't. 2017 happens, and I'm like, man. But even at that time, I knew, okay, this is kind of stupid, and it's going up too fast. So I'll steer clear for a moment. And then 2018 or so is when I started to kind of scale into it, and really enjoyed the last run. I thought we'd get more out of it than we did, but that's okay. But the crypto journey really started, I would say, from the long side in 2018, from the observer side, 2017. And then from there, you go down the rabbit hole. You look at all sorts of other ideas. You learn about Ethereum, you learn about other layer ones. You dabble in all sorts of these things, and then you have to use them to kind of really have it click for you, to understand, okay, this makes a lot of sense, from an investment standpoint too, because these types of assets are going to definitely change the way you know certain entities can do business. And how do you get ahead of that?
So it seems like we have a similar background in terms of our crypto journeys, but I actually come from that traditional finance background. So I worked at one of the largest Japanese banks and one of the largest European banks in the world. And I did risk management there. And I remember, speaking of crypto journey, I remember hearing about Bitcoin because this young dude that sat next to me, I was working in internal audit as well, out of all places, working in credit review. So doing a credit analysis work tied up with internal audit. And this guy, instead of doing his work, he's checking Bitcoin prices and altcoins. And I had no idea what he was talking about. And this is 2017 during I guess it was a FOMO rally.
Mm-hmm.
And so that's when I first heard of crypto. So
That's
speaking of
fun.
crypto, are you now or have you ever been a Bitcoin maximalist?
Actually, no. Even when I first discovered Bitcoin, you know, I was getting Litecoin at the same time, um, because my entry into some of these things was very primitive. It was, I don't want to go the KYC exchange route right away to start acquiring, actual positions. I'd rather not put a whole lot of risk into this. So I started really basic with like the faucets, and a lot of these things were paying you in like Litecoin or Dogecoin. So no, I've never been a maximalist. I've always seen Bitcoin as probably the safest, strongest, for a variety of reasons, but there are a lot of problems with Bitcoin. Scalability is a problem, privacy is a problem. So that's where you look to other things that help alleviate those problems.
And it's also a two-sided coin because you said that a lot of the problems with Bitcoin include, and you mentioned, I think, privacy, that it's
Mhm.
not private, but that could be a positive in terms of a potential regulation. I think the regulators, right, they want to jump on everything, including Ethereum. As you know, Ethereum
Yep.
was considered a commodity until recently. Now, Gary Gensler is saying, well, maybe it's not a commodity according to the Howey test. And he says that even if it doesn't fit the Howey test, if it quacks like a duck and walks like a duck, it's a duck. But it looks like Bitcoin's going to be left out of that. And one good thing is that it's not private, right? Like you can see everything going on the chain, on the blockchain.
Yeah, well, in a lot of ways, Bitcoin is something that I think many, well-known establishments are probably afraid of, because it means that if you actually use this type of thing, like everything you're doing is going to be transparent. And I think that there
Right.
are a lot of establishment organizations that probably would prefer to not have that level of transparency. Not to jump into my own book already, but one of the reasons why I like Zcash so much is because you get both, right? You can do transparent or private.
And the thing with Bitcoin is it's really another animal anyway, but it's very odd. Going back to what you said, it's very odd that the common wisdom, especially of people that don't follow crypto, the wisdom, the narrative is that it's for money laundering because you can hide everything when it's a complete opposite. It's very ironic.
Yeah, it's funny. I mean, I think that, and I watched this in the last run up, and even when I wasn't, on the long side in 2017, even at that time, I saw problems with the whole it's only for criminals, narrative. It was very easy to disprove that with even a rudimentary exploration of how it works. And I think that it's silly that idea is still out there. In time, it'll go away. It's very obvious that you know U.S. dollars are used for crime, or any other fiat currency is used for crime to a very large degree. So, you know,
We don't hear about those.
no, no, no. But these narratives come and go.
And there's a company, I believe, I think it's called Chain Analysis, that actually does this research of money laundering on the blockchain for the US government anyway. So,
Right, right. And they've actually said that they can follow Monero's ring signatures, which, I mean, I don't know about that, and I wouldn't say that that's a reason to not look at Monero if you're into privacy. Um, but yeah, that I'm familiar with that company, and yeah, they claim to have the power and the ability to do quite a bit of tracking, even through things that want to be private.
yeah, and that's what I hear a lot of about, by the way, Monero. Coin Bureau guy on Coin Bureau always
Hmm.
talks about Monero, but I'm not too familiar with that because I try to stay away from coins that focus on privacy because I'm worried about regulatory authorities.
Sure. Yeah. I'm long Zcash personally. As if you're going to get a privacy coin, I think that's the one to go for. I have nothing against Monero. I think Monero does a fine job. I've used it. I don't have a big position in it, but I've never used it for you know
Money
obfuscating
laundering?
funds or anything like that. No, it's just to try it out. I think you have to learn by doing with a lot of these things. Um, but I think that yeah, Monero, if you're really a privacy advocate and a privacy absolutist, then you're probably going to pick Monero over Zcash. Totally fine. Don't hate it. But what I think is going to be challenging for them scaling a user base is that none of the exchanges offer it. And most people, I don't think, are going to come through a non KYC exchange. I think people are
Like a
onboarded through things
DEX.
like Kraken, through things like Coinbase, and those types of exchanges aren't going to carry it.
Yeah, and I was just watching a few videos from Paul Barron, and he really focuses on the UX and dash user experience. The problem with Web3 being blockchain versus Web2 is of the user experience. For example, we're on Zoom right now, and we don't know what's going on behind the scenes. Which I just clicked on your name, and boom, you turned up. And that's how we want to see blockchain. But right now,
Yep.
it's not like that. It's a pain in the neck to use soft
Correct.
wallets, hard wallets, or whatever. And then you need so many different types of wallets, and some wallets don't hold the coins you want. And then if you're transferring money, you have to use this big address. If you make a, God forbid, you make a mistake, your money's gone,
Right.
or you can get hacked. But of course, there's an Ethereum name service, which is like a domain, right?
Yep.
But that helps. But still, the whole point is it's still a pain in the neck to work with blockchain. So what I wanted to say earlier, I should have said it. We're going to have like a framework here. So we talked about our backgrounds, and then more of a helicopter view, and then we're going to go back into the crypto market. So what I want to talk to you right now is global macro. Now I understand you're not a global macro guy. Am I correct?
I wouldn't consider myself a global macro analyst or anything, but no, I do pay attention to the things that, you should pay attention to. Cost of credit, is the Fed hawkish or dovish, things like that. Uh, job numbers, those types of things. Then I mean, I think if you're a serious investor, you have to look at that kind of stuff.
Yeah, exactly. That's what I was about to say. Um, One thing about Bitcoin, I did a video about Bitcoin, and I said that Bitcoin is macro and macro is Bitcoin. So yes, they're joined at the hip. So that's why I just want to ask a few questions about global macro. The first one is, if you have any, what's your framework for the markets? If you have a framework for the S&P, for gold prices, Bitcoin, interest rates, what have you?
Well, I think that, a lot of the retail people, and I would consider myself retail, obviously, have had to learn the hard way that, when when cost of credit is cheap, it's easier to justify multiple expansion or anything like that. We've all discovered the value of value investing now. So right now, what I'm looking for primarily from an equity standpoint is some sort of a dividend or a yield. I think that that's pretty important. Having some sort of, and this really varies by how old you are. I'm not, I'm still in my 30s, but I think that at this point in the cycle, you want to be in kind of a protection, defensive type of positioning that could change, in a certain environment where maybe the Fed stops hiking or maybe other central banks, put on the printing press again, then yeah, you could put more risk on because if the currency that you're using on a day-to-day basis is losing value at an alarming rate, which is happening in many countries, then you have to do something to alleviate that. So for me, because I'm US based and I, transact in dollars generally, I'm watching the Fed. That's kind of where I'm at. If I'm investing in equities, I look for something that's going to pay a dividend. And as far as following just the the S&P or any index, I rely a lot on technical analysis, and I rely on consumer sentiment. So what are bank deposits looking like? What is the Michigan Consumer Sentiment Study looking like? Um, Things like that, and I'm really waiting for, I think, signs that the consumer is healthy before I'm getting outside of a investment portfolio that's cash heavy, and I'm cash heavy right now. So I think the next thing that you have to look for if you're a macro person is the S word, stagflation, right? Is that what we're heading towards? Because if that's the case, then you have to make certain allocations to your portfolio that are probably very different from what you would do uh, in an inflationary one. So that's kind of how I view it. Paying attention to those types of things.
Well, so there's a lot to unbundle there.
Yeah.
The first thing that you said that brought back a memory is you mentioned rates. And I like to think of liquidity because I think that liquidity governs everything. And liquidity just isn't about rates, it could be about multiple things. It could be about the US dollar, for example, could be about credit spreads. just access to money, having consumers having access, companies having access, refinancing risk. So I think liquidity is very important. I remember years ago when I was a kid, this guy, do you remember this guy, Dr. Marty Zweig?
I don't think I've heard of that name. No.
Yeah, he was famous way back in the 90s and used to be on a PBS show, Wall Street Week,
Okay.
and the old version, not the one on Bloomberg. And he always mentioned, don't fight the Fed.
Hmm.
And I never knew what he meant by like, I mean, I knew what he meant, meaning like if the Fed raises rates, it's not a good thing. But back then, back in the late mid 90s, late 90s, 2000s, the effects of rates wasn't as much as it is today. Like something happened. I'm not sure when exactly it started. I would guess it started after the 2000 tech wreck. The Federal Reserve started becoming more involved in the economy, number one. And number two, the US economy and world economy started becoming more monetized,
Hmm.
meaning it became very sensitive to finance, to interest rates.
Yep.
And so now the phrase "don't fight the Fed" has not become something people forget about, but something on the tops of everyone's minds, even investors like you and me that may not be global investors. Maybe we're just looking at stock picking or crypto picking,
Right.
but we're thinking about macro. Everyone's wearing a macro hat because of right, the
Yeah, no, it's
Fed.
true. It's true. Well, and I've been humbled with some of the investments that I've actually kept on over the last 12 months because I've heard "don't fight the Fed." I've known of that phrase for years. The problem that I ran into was at the time, back in November, December last year, even when the Fed is telegraphing what they're going to do, I'm sitting here like, I don't believe you.
Yeah.
I don't believe you. And here's why: because someone has to finance these deficits. Right?
And it works in the interest of the US government if there's inflation, because the interest cost to the government is huge. So they have to have some form of inflation. Actually, when JPO, when he says he's bringing down inflation to 2%, I think that's BS. First, it takes like an average when inflation reaches 5%. Once it breaches above 5%, it takes an average of 4 years for inflation to go down to 2%. But anyway, even if it doesn't, it's in the interest of the US government for inflation to be above 2%. So I think he's going to bring it down to 3%. I mean, if he tries to bring it down to 2%, I think he's going to break a lot of things. How do you feel about him breaking things?
Well, I look, if he continues hiking, then yes, they will break things. And I don't think it's possible that they already have and they just don't know it yet because it's
Hmm.
going to take a time for, these hikes to work their way through the economy. And I think that as you talked about, when you kind of we've gone through decades now of ever cheaper debt, cheaper debt, cheaper debt, cheaper debt. And there's been this idea that there hasn't been any inflation until recently. And that's true if you measure it by something like the CPI. But if you include things that matter, things that people actually have to pay for to live, like food and shelter, we've had inflation for a very long time, right? And so the point that I'm trying to make is that when you have an economy that's been addicted to cheap credit and suddenly credit's not cheap anymore and it goes from 0 to 4, in a matter of a few months, that has effects. You know, you
Oh,
got
yeah.
you got young millennials and old millennials, even people in their 30s looking to buy a home for the first time and they can't because not only is the home price super elevated because that liquidity has gone somewhere, but now the cost to borrow to buy the home is even more expensive.
Yes.
So you got an entire generation of people who are now priced out of home ownership. That's going to have a problem. That's going to have an impact, right? That's a huge, huge problem. That's just one part, though. I think the in some, uh, they can go until they can't. And I don't think that the central bankers, even though the mantra has been don't fight them, I don't know if they're actually in control. I think the market's going to ultimately be in control, as it probably should be. And we'll find out soon enough, right?
Yeah, it reminds me of the movie and book by Andrew Ross Sorkin, Too Big to Fail. Think about that. It was like one blow up after another. Bear Stearns, Lehman Brothers,
Hmm.
AIG, Freddie Mac, Fannie Mae, Countrywide Credit, Washington Mutual. The list went on and on. And then all these investment banks were blowing up too, like
Right.
Morgan Stanley, Goldman Sachs, Merrill Lynch. They all had near-death experiences. So I wanted to go back to some of these issues in terms of breaking things. I have a list. What I do, I'm not sure what you do, is I watch the news every day, and what happens is every day there's new news, and then you forget
Hmm.
about what happened yesterday. So like the fire alarm of today is big bygone, and then there's a new fire alarm, and then we forget. Like today, actually, I want to talk to you about this, the debt ceiling. But before we talk about the elephant in the room, I want to tell you a list of all the risks I see, and I write them down. So if
Hmm.
you don't, you actually can see here the right. The thing is, if you don't write them down, you forget about them. We've got the Ukraine war. We still have supply chain issues. The Ukraine war may hit a new level if Russia decides to use tactical nuclear weapons. We've got, we could talk about crypto, the Voyager issue, Genesis as of today went bankrupt,
Yep.
Celsius, Terra Luna, it goes on and on. The issues with grayscale. There could be emerging market crisis because the US dollar is so strong and interest rates are going up. There was a potential pension crisis in the UK. There might be a pension crisis here because, as you know, pensions have a 60-40 portfolio. Most of them do. Some of them are more like an endowment and have a lot of private assets like private credit, private equity, real estate. But many of them have a 60-40 portfolio. And as you know,
It's been
both
wrecked.
yes, stocks
Been
and
wrecked.
treasuries are wrecked. So
Yep.
that could be an issue. And then lastly, we have Japan. Just a few weeks ago, Japan said they were raising rates, at least implicitly, and they said they're not changing their monetary policy, but it looks like the market is going to force them to tighten monetary policy because of what's going on with the dysfunctional treasury market in terms of JGBs. And what's also going on with inflation. We hit a 31-year high in Japanese inflation. So that's another issue. So there's a lot to talk about here. But one thing, I guess, since I mentioned, I might as well talk about it now. The elephant in the room, the debt ceiling. Do you know it took McCarthy? Is that his name? The guy that just ran for House. Is it
House. Yeah.
McCarthy?
Yeah.
They had to vote for him 15 times to get him in as House Speaker. If it took him 15 times to get voted in, how the heck are they going to be able to vote and agree to something to solve the debt crisis? So what's your view on the debt crisis? Because if you go back to 2011, S&P was down 15%, and S&P later downgraded the U.S. credit rating from AAA down to, I think, AA. So that was a big deal. So what's your view on these potential uh, things that are breaking?
Well, I think let's take the debt ceiling first. I mean, they're going to raise it because they always do, right? They always do, so they will. um,
Kicking
they
the ball.
they they are running a system that is based on a currency that can be created out of thin air. So if you still have people who are willing to use it, or you have some sort of monopoly on violence where you can force your citizens to use it, then you don't ever have to pay it back, right? And so that's where we are. That's where we're at, in my opinion. That the debt ceiling will be raised. Any debate about whether or not it'll be raised is political theater, and we've seen it time and again. They're going to do the thing that's easy for the short term, and when we all have to pay the piper at some point, it's going to be really, really bad.
Yeah, I think they're going to kick the ball, but in the meantime, I think it's a high probability that there's going to be volatility and there's going to be some big down days in the market because you know how it goes.
Could be.
Compromise is a dirty process. It's like making sausage. You don't want to know what goes on in the background.
Right.
So I want to segue because I want to talk to you about crypto, which is like the main point, and we got off. I guess I got really into the macro.
Well,
Uh,
it's fun stuff to talk about.
it's a lot of fun
It's
stuff, and
fun to talk about.
I got a great segue for you that's going to lead into crypto, and it's something I thought about a lot. When I studied for the FRM, Financial Risk Management test, I had to study this guy from the University of Chicago. His name is Eugene Farmer, and his theory, which everyone's adopted, is that crypto is that markets, basically the stock market, is efficient, highly efficient. And I disagree with that. I think the stock market is mostly efficient. But I think, and here's where we're going to segue now, I think the crypto market is highly inefficient. So, what do you think about that? Or is the crypto market efficient?
Oh man, that's a good question. uh
Does it price assets correctly?
my gut reaction is no. My gut reaction is no. Um, I think that the crypto market moves on speculation before utility, and so by definition, it's inefficient then. Because we've heard the running joke with crypto is there's 20,000 or there's 21,000 or there's all these different crypto coins that come into existence, and on paper, many of these have some sort of valuation based off of a very small amount of illiquid price discovery. And I would say that we probably both agree that the overwhelming majority of those 20,000 crypto coins probably are useless and probably valueless, probably zeros, right? So any capital that's tied to those is inefficiently deployed, right?
Yes, and that leads to literally my next question is, do you think that crypto is full of scammers and frauds, or is it just human nature? Because it seems to me there's so much fraud. And I just read recently that about 70% of all NFT volume is manipulation. And then we saw what happened with Celsius and Gemini, and
Yeah.
it's insane. Like, is it just human nature because it's unregulated, or do you think there's something special about crypto that makes it very good to do scandals on blockchain?
I think every innovation is usually adopted first by people who try to game the system, right?
Yeah.
I don't think that's abnormal. I think that we've moved from the Nigerian prince email phishing scam to the Twitter crypto link scam, right? Like there are a whole bunch of nefarious actors on the planet Earth. Uh, Humans, I think, are inherently good usually, but I'm still not 100% willing to trust anyone because I think that human nature can sometimes be one that's driven by some motive of greed. And there are also people who are just kind of not nice, and they see an opportunity to do something very simply without, in their mind, getting caught. And crypto is an easy way to do that. Um, NFTs, you brought it up, like there's a ton of scams in NFTs, a ton. um there's, I don't think any there, I mean, maybe there is some debate, but from where I sit, it's pretty obvious that a lot of NFT projects have been used as money laundering tools. But you could say the same about baseball cards, right? Like there was a Juan Uribe Flair card from like 1990 that was going on eBay for thousands of dollars, and that thing is worth like 5 cents, right?
Wow.
Yeah, so it's just the instruments at your disposal. People find a way to do things that they shouldn't do. Crypto maybe makes something a little bit easier. It makes payments easier. So if your motive is to steal money and you can do so with a mechanism that's easy for payments and instant settlement and irreversible, then yeah, it's better for that. But there were scams in the crypto, the .com boom. There's tons of scams in traditional finance. I mean, I just finished watching a 4 episode special on Netflix about a guy named Bernie Madoff. Like he's not a crypto bro, right?
Yeah, that
So
was huge.
does that answer your question?
Hell yeah. Speaking of something related to that, I don't know if you ever heard of the Pareto Principle, the 80-20 rule.
I don't think so.
Yeah, it seems, but think about it, it seems to apply to everything. Like if you look at market share of companies and crypto, like it's like 20% of the enterprises take 80% of the market share. And going
Okay.
back to Twitter and memes, it seems of bad actors, 20% of the bad actors take up 80% of the mind share.
Mm,
So just think about that. Something
yeah.
it just seems to come up all the time. It's like Fibonacci, it just comes up all the time.
Interesting. Yeah.
So let me go to my next point, and this is just a general question. I thought about this a lot. Where do you think the largest end user growth will be? DeFi, as you know, is pretty large in terms of blockchain. DeFi is large, and then there's NFTs, and there's many uses for blockchain. I'm going to just talk about two. There's DeFi, I think it's $50 billion. Yep,
Hmm.
and then there's NFTs. I guess you could look at total value locked on DeFi. My
Yeah.
point is, I felt that DeFi was going to be huge and it was going to be the largest end market. But the problem is that even though it's much larger than an end size of NFTs, I feel like the incumbent companies, and you could name your company of choice, let's just say JP Morgan and Jamie Dimon, incumbent companies, or even Google, centralized companies, consider blockchain to be a disruptive technology. So it's against their interest in fully adopting them. I think enterprises, centralized enterprises, are going to adopt blockchain, maybe in their back office because of lowest costs, but adoption is not going to be full adoption because it goes against the whole ethos of what a centralized company is versus blockchain, which is decentralized. But then if you look at NFTs, like superficially, and when I first heard about them, I was thinking of, I guess it's people basically board a club,
Yep.
apes, little stupid looking,
Yeah.
ugly apes and cartoons. I'm thinking, how could this be worth something? But then the more I got into the NFT rabbit hole, I realized there's a whole list of uses which I've got written down because I just can't believe there's so many of them. It's not just cartoons. So I'm thinking NFTs have the potential to be embraced quicker and maybe even larger than what's going on with DeFi because NFTs help incumbent companies grow. You can look at what Nike's doing, Adidas, Starbucks with the loyalty program, Adidas and Nike with the NFTs. And or LVMH, when you buy a handbag, you buy a sneaker, you also get a physical handbag or sneaker, you get an NFT. And then there's loyalty programs. There's like so many different ways of using NFTs. And I know you wrote an article about the Ethereum name service, and I even think of the ENS as an NFT because if you think of your name, it's a unique name, and an NFT is a unique token. So, what do you think is going to be embraced quicker, DeFi or NFTs?
I think that people are going to end up using NFTs without realizing it, and they
Yeah,
kind of already are. You know,
yeah,
the Polygon avatar, the Reddit avatars on Polygon, people bought NFTs without realizing it. People who bought Trump trading cards probably bought NFTs without realizing it. It's
yeah.
funny, like it's that is the silliness of that aside. Um, I think that my base case for NFTs is domains because of you mentioned ENS earlier in this conversation. You talked about how cumbersome it is to use crypto. If I'm going to
Yes,
send you $5 over one of the networks, I have to know this long string of characters that it would be very easy to mess up, and without a copy paste mechanism I can't send it to you. If I'm standing right next to you and I want to give you $10 because we're splitting lunch, I have to have, if I'm on Venmo, I just need your username. Or if I'm on
exactly.
Cash App, I just need your username. But in crypto, I need this ridiculous string of characters. But the name service, Ethereum name service, Unstoppable Domains, which is a competing service, they offer domains that take that problem away. Like I use one, right? I have a domain, fabom.crypto. You can send any number, about a dozen different cryptos to fabom.crypto from no matter which app you're using, right? You can do it through an Unstoppable wallet. You can do it through Edge wallet. I think Exodus is another one that uses it. So the ability to turn any crypto wallet into essentially the same thing as Venmo, I think is a game-changing function, and that's possible because of the domain, right? And that's an NFT fundamentally because it's a non-fungible token. None of them are the same.
Yeah, and I think we're moving in the right direction. I think the key to adoption is going to be user experience. And if you look at what Avalanche is doing, they're moving quickly in that area. I just heard John Wool. He's the president of Ava Labs out in Brooklyn, New York, and
Hmm.
he's embracing that. Through Amazon, it's not just that they're using Amazon as for cloud. That's like 1% of the story. It's about making it easy for the consumer to launch or use open in any application and make everything behind the scenes. So we only have time for one question. I think it's only going to be one question. So I'll give you another philosophical question.
Sure.
Recently saw a few months ago, actually, I saw Vitalik Buterin speak, the guy from Ethereum, of course. And he talks about the blockchain trilemma. So which one do you think is more important right now? Decentralization, being secure or being scalable, meaning speed. What's the most important element of that trilemma?
Oh God, it depends on which. It depends on what you're trying to do.
Yeah, that's a good.
If you're completely focused on um, the financial monetary component of it, then if you're a DeFi participant, then it's probably security. If you're a person who wants to hold your keys, not your keys, not your coins, then it's probably the decentralization. If you want to just be able to do something real fast, real cheaply, then it's scalability. So, I think it's the beauty of the trilemma is that there's no correct answer. It depends entirely on what you want to do, which is why I think that we're going to live in a world where there are multiple chains because no one chain to this point has solved all of it.
Yeah, and that was going to be my last point. I won't make it a question because you already answered it. But I think even though Ethereum is going to dominate, there's going to be chains that specialize for certain things. Like if you're trading tokenized assets, obviously speed is
Yep.
the number one thing you want. So yeah, so each chain is going to have a certain specialty, and then you have
Mhm.
chains like I'm going to talk about this later. Avalanche that have about 5 subnets that allow you to customize those chains for your users. So you know what? There was so much to talk about that I think I only talked about the top level helicopter view with you. So I would definitely like to have you back here on Lamb's Cryptoverse. And what we're going to do is we're going to put a link. I'm going to put a link to your your um, your website on Seeking Alpha in the minutes below, in the summary below, and then we're going to have you back. But thank you all for listening, and thank you, Mike Fay, for joining us on Lamb's Cryptoverse.
Thanks for having me. Can't wait to be back.
Take care, man. Bye bye.